Greetings from the Charter School office. I'm Albert Bertram, the finance specialist for the office. So this sheet is a review of the audited financial statements. It essentially takes the audit that's 40, sometimes 50 pages long and summarizes it into 4 pages. So this is a form of communication between myself and others in the office, and we use it, part of its information, for renewal, and it also allows easier comparability from year to year. So it's easier to look at 4-page sheets from year to year than it is to look at the massive 40, 50 pages every year. So that's why we've created it, and now we're instead of having those regional board trainings, we're bringing it to you via video. So hopefully you enjoy this delivery method. So let's get into the sheet. We start out in the statement of net position. So just to show you that all this information is directly derived from the audit, I will show you total assets as an example. So total assets is $775,556 on the sheet. If we go to the audit, we'll see the statement of net position up here, the title, and then we'll see our assets right here. Here's our total assets, $775,556. So if you wanted to match up these other numbers on the sheet, you could do that. We'll go back to the sheet. So these numbers should match up to that page of the audit. You'll see the ending net position is negative 2,312, and that would be the June 30th, 2014 number, and then this is the June 30th, 2013 number. So you can compare the difference from last year to this year pretty easily with that. Then you'll notice that it declined and that it is below zero, meaning that there's more liabilities than there are total assets. So that's what that is. As we move down, we'll see our balance sheet. These are general fund current assets, and this is all the assets right here listed out, cash, etc. If you move over here, these are the general fund classifications. So to show you where these are at on the audit, we'll go back to the audit for a moment. The balance sheet is 2 pages after the statement of net position. So 1, 2, there's the balance sheet. So this part deals with the general fund again, so it's this column only. So if you had other funds such as food service, debt service, whatever, those aren't counted in this specific area of this sheet. So it's important to know that. So here's our assets. If we go down, here's our fund balance classifications. We have non-spendable and unassigned. Before I move on, we're going to get into the general fund up in the upper right hand corner of the sheet in a moment. But if this is the general fund, you notice that it shows that there's a positive general fund balance of $89,041. So that is kind of misleading, because if you compare the food service fund, you'll notice that there's a deficit of $89,041 in the food service fund. So we've written about this. This is technically allowed in accounting because you want to show how each individual fund performed individually, and that's why it's allowed. But it's still important to note that the general fund essentially has to cover that deficit, and there's not anything left over after that coverage. So we'll go back to the sheet now. So here's all those assets that we just went through. Over here is our fund balance classifications. So we have unassigned amounts that are available for any purpose. These amounts are reported only in the general fund. And then we have non-spendable, which are amounts that cannot be spent because they are either not in spendable form or are legally or contractually required to remain intact. So these are usually associated with prepaid amounts, which is the case for International Academy of Saginaw. You'll see over here that the prepaid amounts, you can't spend what you've already spent, so that's why that is the same amount. So moving up, we'll see our general fund breakdown of activities for the year. This is a summary. Page 2 has everything broken out into detail. So there's the beginning fund balance, the revenues, the expenditures, if there was any other financing sources, there is none, and then the net change, and then the ending general fund balance. So that's a pretty good snapshot, a broad snapshot of the year's activities. Below that, we have the general fund percentages. These are just a couple calculations that we use to compare things from year to year. So this takes the ending general fund right here, divides it by the total revenues right here, puts it in a percentage. This is essentially the same calculation, just it would subtract a restricted amount if there was an amount restricted. Usually it's restricted for debt service or something like that. It's not the case for this school, so those are the same. General fund divided by expenditures takes the ending general fund divided by the total expenditures, puts that in a percentage. Some people like to look at that percentage, some prefer this. If there's a large capital outlay during the year, this number could be potentially skewed, so that's why it's good to look at both of them. And then to understand why there's a difference between them when you're looking at them, try to look at the difference. So as this sheet comes out from year to year, you can look at these percentages and then show the trend if it's going up or down. So that's what those are for. And then this ending general fund divided by beginning general fund takes the ending general fund and divides by the beginning. If it's below 100%, then there is a negative net change. If it is above 100%, there was a positive net change. So there was a negative net change, and that's why this is reflective of below 100%. So I'll move down the sheet. Before I move it down, again, these numbers are somewhat misleading though, because that 89,041 in the general fund is going to be eaten up by the food service fund. So these are kind of misleading. So just know that. Remember that example I just showed from the audit. So as we move down, we have notes payable. This is usually if there's a state aid note or other short-term borrowing. There is none. So long-term debt is usually any type of long-term borrowing. In this case, I believe this is associated with management fees due from page 20 of the audit. So we'll get into that in the notes section. But usually that would also be if there was a revenue bond or something like that. That would be classified as long-term debt. So capital operating lease. This is the building lease right here, and then this is the management fees. So again, this takes the note section of the audit and summarizes it into numeric tables. So it's just easy to look at that way for some people versus having to read it all. So this percentage of state aid calculation is not this is not the direct percentage that's from your note section or your management agreements. This takes the total management fees and divides it by the total state aid, just to make comparison from school to school and from year to year to see how things change. So that's what that is. Earned divided by fall 2013 takes those management fees again and divides it by the fall 2013 count, which is the corresponding count to this fiscal year. So that's what that is. That will be comparable from year to year as well. Total square footage. Hopefully this is up to date and accurate. If it's not, let us know. We'll update it, and this will change all the formulas. So this square footage is used for these calculations. Revenues per square foot takes the total revenues divided by that square footage. Expenses per square foot takes the total expenditures divided by that total square footage. The difference, this is 1 because there's a rounding error, just so you know. And then payment per square foot. This takes the lease payment, the total payments for the lease, and then divides it by the square footage. If this were a bonded school, so if the school utilized a bond to pay for its building, I take the principal and interest payments for the year on the bond, and then divide that by the total square footage. So that kind of makes it semi-comparable, these leasing and bonding schools. So operations and maintenance per square foot takes the line item of operations and maintenance down here, and then divides by the square footage. Another comparison to look at from year to year. And then square footage divided by fall 2013 takes the square footage and divides it by that fall count again. Moving into page 2, this is the general fund comparison. So this takes the box in the upper right hand corner of page 1 and expands it so you can see what the breakdown is for all that. So here's June 30th, 2014, June 30th, 2013, and the difference. So this will let you look at things really well and say, oh, what happened from that? What's different from this year to this year? So these are revenues up here. Expenditures are down here. If you notice, a lot of these have this accounting code on it. These are all separated how they're supposed to based on the accounting manual. If you're ever curious what any of these are, it's pretty easy to figure out what they are. I put the accounting manual into Word, You come up to the upper right hand corner. This is I think Word 2013, and you push find, then type in what you're looking for. We'll use basic programs as an example. Once you do that, you push results, and then you can actually skim through this document, and then it will find what you're looking for. So if you're looking for what basic programs is, here's the number. And then basic programs are instructional activities, including enrichment designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. And it includes pre-kindergarten, and it goes on to say elementary, middle school, blah, blah. So anyway, if you're ever interested in figuring out what some of these things are, they're pretty easy to figure out if you do that. If you put that document into Word and then just search for it, you can find what they are. So it's important to know what all this stuff is. So if you don't know, ask a question and we'll figure it all out. So this can be used to compare from year to year again, why something increased, decreased, and then understand what's going on at the school level relating to those increases and decreases. So this should be the ending general fund balance that matches up to the upper right hand corner. Again, this doesn't take the food service situation into account, so it's important to know that. Down here is the budgetary comparison, the original budget, final budget, actual. This note here just is there to state that the original budget is due July 1, which is well before the fall count, and budgets tend to change after that fall count is received. Whether it's an increase or a decrease, it could vastly change your budget. So it's just a reminder for myself and others in the office. This is the budget difference between the actual and the final budget, and then this is the percent change between the actual and the final budget. So as we move down a little bit further, you'll notice this instruction percent of revenues. This takes the total instruction. I'll scroll back up. Takes the total instruction and divides it by the total revenues. So it's just a percentage. It's just a way to compare from year to year. So if we go back down, we'll notice that it went from 57 to 54 to 55. Now 2012 isn't portrayed on this sheet, but 13 and 14 is. So 54 to 55, we can look why that happened. So you notice that at first glance you'll say, well, less money was spent on instruction. But if you look at total revenues received, that total revenues went down by a much greater amount than did the total expenditures related to instruction. You can see how that number actually increased from 54 to 55. So revenues went down, but instruction expenditures didn't go down by as big a ratio as did the revenues did. So another way that this isn't absolute. That's what that's meant to say. It's just an indicator. It's like a ratio. So an example, if a teacher resigns or retires or whatever, who is making $50,000, and the replacement teacher is hired at say $30,000, that's going to decrease those expenditures, but not necessarily decrease the amount of teachers or the student to teacher ratio or anything. So it's important to know what's going on. So these are just meant to help you ask questions, not meant to be absolutes. So over here we have revenues as a percent of fall 2013, or not a percent, revenues divided by the fall 2013 count, excuse me. So this takes the total revenues, divides by that fall count. Expenditures, again, it's always important to look at both of these in case there's a large capital outlay or something, or if there's a large donation or something in revenues or something like that. So it's important to look at both these and understand why they're different. Then the difference, as we move into page 3, this is the enrollment numbers. These numbers are derived from CEPI. So I don't like to use acronyms without showing what they are. That's Epicenter. So CEPI stands for the Center for Educational Performance and Information. This is a state operated site. So if you're looking for this data, you come down to My School Data and then go through the filters. Here's student count, free and reduced lunch count, special education counts, and then there's all these large spreadsheets with all the schools in Michigan. Instead of making you guys look through that, I did that for you. So we'll go back to our sheet. So that's where these numbers are from. The last one is the number I received via Epicenter, which is the file retrieval system between the charter school office and the school. That I received a number, an unaudited number, on the DS 4061 sheet. And that number is what this number is. So if that number changes when it gets audited, this number is subject to change. So if you're looking at next year's sheet and you're saying, why did this number change? That's why that number changed. So this is the percent change from count to count. So spring to fall, fall to spring. For the numbers people, this shows your percent change. For those who are visual people, we have a graph down here so you can just look at the counts and see the trend visually. So that's what that is. Below that, we have our free and reduced lunch count. Again, these are from SEPI. And then this is the percent free and reduced lunch. So this takes the free and reduced lunch count and divides it by the total fall count and then puts it in a percentage. So that's what this is. And then this is the graphical display of the free and reduced lunch counts for those who are visual people. As I move into page 4, this is the notes section. So this is not my typing. Well, it is my typing, but it's directly from the audit. So this page number is the page number from the audit. So you can go look this stuff up from the audit. So this section is the debt information. So this just talks about the buildings, and the amount expense for lease payments totaled $234,600 for the year ended. So you can look up that stuff. Here is the management company information. So this tells how the fees are broken down for Sabas and Cincinnati Education Management, if you're interested in looking at that or you haven't looked at that. And then if you recall on page 1, I had something listed in the long-term debt section, which there's not expressly stated as long-term debt in the audit. But if you look at page 19 and 20, it shows it says the Academy owed Cincinnati Education Management LLC $389 at June 30th, 2013, and owes $594,606 at June 30th, 2014. So when amounts carry over from year to year, we consider that long-term debt, because with governmental accounting, it's supposed to be you're supposed to expense, or everything is supposed to be expenditurized in the year that the revenues are received. So anything that carries over from year to year is considered long-term debt. So that's why we labeled that up there, and that's why this is listed down here. Again, that's from the audit. I could show you page 19, 20. This is going to be page 8. So just a moment. I'll pause. All right, I didn't want you to have to wait there while I found this, so I paused it for a second. That's why there was a transition. So the Academy owed Cincinnati Management LLC $594 at June 30, 2014. The amounts owed to the management company are summarized below. So here's where that note's from, and this is on page 20 of the audit. So I had to find the PDF. The PDF is actually page 25 of the PDF, but it's page 20 of the audit. So that's why there was a little bit of confusion on my part. So we'll go back to the sheet. So yeah, page 20 is where that's located. There was no findings, which is good. And then down here, just a couple notes that weren't related to management company or debt. I just talked about the food service fund, that there's a negative net, and there's a negative net position. So those are two things that were important to bring up. So I think that's it. My contact information is albertb@bmcc.edu. We'll probably follow up with any questions via letter or email, so feel free to do that. We hope that this is a benefit bringing this to you instead of making you try to come to a regional board training or something like that. And we thank you for all you do for the children of Michigan. Have a good one and stay warm. Bye.